Good morning, Armor Insiders. Welcome to the morning meeting of our virtual hedge fund. We're going to talk about our day trades, swing trades, and investing positions in our hedge fund. You're the portfolio manager on the desk, CIO. I'm going to share ideas and thoughts with you. At the end of the day, risk tolerance, goals, they're up to you. Figure out how to execute your strategy and be the smart money. On the investing part of the portfolio, let's talk about, let's take a minute to appreciate significant success. I mean, we all spend a lot of time going over all our mistakes and, things that we missed and, I can't believe I didn't get on that one. So let's make sure we spend at least an equal amount of time reinforcing success. And I would argue we should spend more time talking about successes and reinforcing them. All right. So at the end of the day, you just don't get a better entry point than IBM right here. In the 170 area, IBM's trading above 230 now. It's just ripping higher. We caught IBM for all the right reasons. And what I wanted to show you, part of what I wanted to show you was, the market doesn't always get it right. The market often gets it wrong. So what you have here on this IBM chart, is a gap up on an earnings announcement. And then, or I think it was an earnings announcement. That doesn't seem right, though. I don't know why it gapped up. Could have just been a blow off top. And then the gap down because earnings weren't good enough. Street didn't think earnings were good enough. And so it looks like a top is formed. And it's the end of IBM because the earnings number didn't somehow please, a handful of analysts who haven't the slightest idea what they're doing. Okay. And what we did was buy IBM on the 200-day moving average for a whole host of reasons I'm not going to go over right now. The fundamentals to us of IBM, let me put it this way, made buying IBM on the 200-day moving average a no-brainer. The reward to risk was right. The Armor Algo gave a buy trigger right in here around 170. And what we talked about then was, hey, the reward from here, if we're right on the fundamentals, is worth the risk, which is the stop. The stop was the double bottom low. Okay, not a big deal. We'll take it out. That'll be the way it goes. But if we're right on the fundamentals, and if the street's wrong, then we're going to make a lot of money in IBM. And we're going to pick up a 3.5% dividend yield while we do it. And so that's what's happening right there in IBM. We're making a lot of money in IBM. And the reason we're able to execute like that is because we focus on one simple Armor axiom. In fact, it's the number one. Our job is to get on the right side of probabilities when reward is worth risk and then execute. Stop asking all the other questions. Get rid of all the other noise. Just execute. Do you want to own a company? I wanted to own IBM for all the reasons I can come up with, but the reasons don't really matter. Sometimes my reasons are going to be right. Sometimes they're going to be wrong, just like everybody else. So the key is work on your whiteboard, figure out what companies you want to own. You're going to come up with some great ideas I'm going to miss. It doesn't matter. Find out what you want to own. Use an algo for an entry point, which puts you on the right side of probabilities and statistics. The algo is not a crystal ball. It just gets you on the right side of probabilities over and over again. And do it when the reward is worth the risk. In other words, where's the stop? If this doesn't work, I'm out here, I lose X. That's okay. I can handle X. But if I'm right, I'm going to make multiples of X. That's how you make money in the stock market. That's it. Let's go to the next highlighted chart of the day. So IBM's already happened. I'm not telling anybody, let's run out there and buy IBM. I'm just enjoying the fruits of the labor there. But what are we adding to right now? We're building a part of our portfolio. We're as it just so happens, I didn't do this on purpose, but I'm starting to focus there. There were just so many chart patterns popping up in the fintech space that are really explosive. And so I've found my way into PayPal. Okay. And just look at these chart patterns. We're talking about long-term downtrends. Okay. Companies that have definite intangibles, definite, I don't know if blue chip's the right word, but they're strong in a particular space and they've gone through some hard times and the stocks have been destroyed. And we talked about this yesterday. These are IBD 50 type of names. We went over IBD 50 yesterday. So this is the whole index of innovative growth stocks. When they get going, they're the best place to make money. And for me, I have the most amount of fun and the most amount of success investing in innovative growth at the right time. Right? When the Fed starts raising rates, blah, 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 you can't own innovative growth. They get destroyed. But when you come out the other side, this is the IBD 50, you get these perfect setups and you can go on a real tear in a portfolio if invested correctly. Okay. So looking at that chart, I'm just finding charts that are similar to the IBD 50. Okay. PayPal. A lot of these things are turnaround stories. There's goodwill in these companies. that's intangible. There's goodwill. We know PayPal's got a business that's valuable. They're going through a transition. They're turning the business around. The stock is starting to move. We added Square recently. It hasn't even moved yet. It's the same story. Block, same story, same chart pattern. Here's a couple that did move. First thing we did was, hey, I got to call you back, brother. All right. First thing I did was put some interactive brokers in the portfolio. Stock's just skyrocketing. Hey, let's give a nod to Chad. What would Chad do? Chad would buy Hood. He's buying Robinhood. The stock's breaking out. And so now I bring you to the highlighted stock of the day, highlighted chart pattern of the day, and I give a nod to another Armor Insider, Joel, for constantly pounding the drum on SOFI. SOFI is the same type of fintech story, breaking out of the same type of base. And in fact, I want to show you the weekly chart here. Look at the weekly chart of SOFI, okay? This is just a classic pattern, one of my favorites. The entire price action of SOFI is a huge bottoming wedge. Stock's coming across 8. This is the week to own it. This is the week to own it. Look, is it a guarantee the stock goes up? None of these things are guarantees. These are things on the whiteboard. We have group moves, money going into what I call armor power plays or innovative growth stocks, bottoming wedges. These are the chart patterns and the process that's paying us a lot this year. So elevated SOFI to the top of the whiteboard probably is going to find its way into my portfolio before the end of the week. If it closes above 8, the stock has to be owned. And then what happens? I mean, you can use 8 as the stop. It goes back below 8, I'm out. There's the loss I take. But if we get it right, what's the reward for the risk? I think it's multiples, right? If we get it right, this is the type of thing. These are the rewards. Every time you put money to work, there's a risk to the stop. But if your fundamentals are right, the reward's this. Those are my thoughts for today here at the Armor Investing Way. Not a lot to change in the portfolio. Going to manage it to the stops, managing success right now. We have a nice balance of commodity, innovative growth, income ideas, Pfizer breaking out. I mean, there's a lot of places to go with capital right now. It's a mechanical bull market until it isn't, and we're going to ride that success. I look forward to working with you guys. At 9:30, we'll get the live stream going. Armor Insiders, Armor Report subscribers, you're on your own now. Execute your strategy. Got questions, put them in the comment section of this video. If you guys, any of you find this process to be overwhelming because of your day job and you want help, I'm here for you. Pick up the phone, call me. Happy to chat. 561-575-6832. At the end of the day, everybody figure out your strategy, your risk tolerance, your goals, and execute it. You can be the smart money. Do it.